In the same week that software stocks lost nearly $1 trillion in value on AI panic, the Dow Jones Industrial Average turned around and ripped to 50,000, its highest level ever. Headlines screamed about an AI-driven tech wipeout and the worst two-day drop in the NASDAQ in months. But by Friday, the Dow was up more than 1,200 points in a single day as investors bought the dip. So which is it? Apocalypse or all-time high? The honest answer is the market can't make up its mind. And that confusion is in fact the real story. Software and services stocks were hammered after new AI tools, including a legal automation model from Anthropic, spooked investors into thinking whole business models might be obsolete. An index of software names lost more than $800 billion in about a week. Hedge funds made an estimated $20 billion shorting the sector. Big names like Salesforce and ServiceNow dropped close to double digits in days, even after reporting solid earnings. Then almost immediately, strategists started saying the sell-off was overdone. The sentiment was not fundamentals and driven by fear more than by math. Bank of America pointed out the contradiction. Prices were acting like AI CapEx was collapsing and ROI was terrible, while simultaneously acting like AI was so powerful it would wipe out entire industries of traditional software. As one note put it, both things can't be true at the same time. Meanwhile, the Dow, full of old school industrials, banks, and a handful of big tech names, shrugged off the panic and blasted to new records as money rotated out of the most hyped software names into everything else. On paper, that looks like the economy is great. In context, it looks more like Wall Street is stress eating, changing its mind every 48 hours about the future of AI. So the market isn't right now a wise verdict on the economy. It's a live action anxiety chart. When people say Dow 50,000 proves everything is fine, they're ignoring that the same system was insisting that software as we know it might be dead. In an AI era, these swings are only going to get wider. Every big model release, every scare headline about disruption, every earnings call that mentions AI a few too many times, each becomes a trigger for billions of dollars to slosh around between sectors. One day, AI will be the savior driving trillion-dollar valuations. Another day, AI will be the reason everyone dumps the same stocks. If you're a normal person trying to read meaning into this, don't. The important story isn't that the Dow hit 50,000 or that software cratered for a week. It's that the market is struggling to price a future nobody understands yet. Is AI a productivity miracle that justifies sky-high valuations? Or is AI a profit-eating machine that will burn cash and cannibalize existing products? Watch the tape on any given day and you'll see Wall Street answer yes to both. So instead of treating every new high or sharp drop as moral judgment on the real economy, it's better to see it for what it is: mood swings. Dow 50,000 doesn't automatically mean your life is getting better. The software sell-off doesn't automatically mean the tech era is over. What they both mean together is that we're in a moment where the people with the most money riding on the future keep changing their minds about what that future looks like. And if they can't make up their minds, you shouldn't feel bad that you can't either.